Hey, what's up, guys? Houston here. Look, if you have student loan debt, all right, and you worried about the government garnishing your wages, I'm gonna tell you the best personal online loans you should look at to try to refinance those loans or get a loan and pay that student loan off so they won't garnish your wages, all right, or your Social Security benefits, all right. Now, the first one I would definitely look at is with Avant, all right. And the reason why Avant is because all you need is an average of a 550 credit score. However, here's the thing you have to understand. With some of these lenders, if they say you need like a 550, 580 credit score, just keep in mind, you have to have a strong income. All right. And so what I mean by a strong income is that your income should be at least $45,000 or more. Now, here's the interesting thing about Avant. They say that the minimum monthly income you should have is at least $1,200 a month. All right. But I want to tell you, out of all transparency, when you have a very low credit score, you should have a strong income. All right. Now, again, the interest rate starts at 9.95. The DTI, and another reason that you probably want to go for them is because their DTI is 75%. All right. And so where your regular banks and credit unions, they want you to have 50, 55%, there's a 75% debt to income ratio. All right. And you can actually do a soft pull on it. All right. Now, another lender that you may want to look at is Best Egg. Okay. Now, they said they work with you if you have at least a 600 credit score. Now, their interest rate starts at 7.9. The DTI on them is 70%. Now, your credit file has to be at least 3 years old in order to qualify for them. Yes, they do a soft pull, but another thing about Best Egg, I would definitely tell you guys, is that with Best Egg, if you have an automobile or if you have a vehicle with equity in it or a paid off vehicle, they would actually also give you a loan against that as well. All right. Now, here's something I'm going to tell you guys so that you won't be left in the dark. If you're working a W-2 job, then what I would do, I would probably go to the HR and request to file your W-4. File exempt so the IRS has stopped taking taxes out of your check for at least 3 to 4 months. That way, when tax season rolls around, if the government decides to garnish or take your income taxes or whatever, they won't be taking a whole lot of money away from you, all right? Because you're going to be using the majority of it up front, all right? So that's the reason why I would definitely tell you to do that, all right? Now, the next lender is Universal Credit, okay? So with Universal Credit, they're associated with Upstart. Now, the minimum credit score you need is a 580 credit score. Their interest rate starts at 11.69. All right. Now, a good thing about it, again, the DTI, the debt to income ratio, is 75%. Your credit file has to be at least 2 years old. And yes, it is a soft pull. Now, their loans go from $1,000 up to $50,000 as well. But again, when these lenders tell you that we don't do a hard pull on the credit, best believe they're going to use the third-party credit bureaus like Clarity, which is owned by Experian. They're going to use LexisNexis. They may use DataX, or which is owned by Equifax, Factor Trust, which is owned by TransUnion, or they may use Teletrack, which is owned by Equifax as well. Okay. Now, one of the things, again, I continue to tell you guys, for most people, these are easier loans to get. All right. And the reason that I'm pointing out these loans is because they're not the triple digit high interest rate loans. All right. So that's the reason I'm pointing them out. And these are not tribal lenders. These are direct lenders, but they're not tribal lenders. Okay, so like with the tribal lenders, I tell you, they have more flexibility and stuff when you have a bad credit. Now, You have Max Personal Loans. Now that's a tribal lender. And with them, again, the interest rate's more likely is going to be much higher than this. However, they don't have to go through all of that paperwork that a lot of these lenders may want to go through. All right. Now, with Max Personal Loans, again, they go from 2,500 up to 50,000. They're not in all 50 states. That's another thing with some of these lenders. When you're trying to get approved, they may not service your state. All right. So that's very important. Then the thing about it, like I said, when you trying to beat the clock, basically is what you're trying to do. And what I mean by that is that you know that, hey, you may have defaulted on your student loan. And one of the things, I'm going to reiterate this for you guys. If you've defaulted on your student loans, I'll get back to the loans, but I want to tell you guys, if you defaulted on your student loans, you need to ask for not the contract, but you need to ask for the accounting record. And the reason you need to ask for this accounting record, because this accounting record, it actually shows you where every dollar went. And for most people, when they default on a student loan, let me break it down like this. When you default on a student loan, they took out an origination fee. That origination fee, what it did, it covered the administrative costs plus the insurance for establishing the loan or loaning the money out, right? So in case you default, they're going to get paid because they're going to cash in on that insurance policy. And a lot of people are not aware of this. Even the federal government hides this from people. When you default, they have an insurance policy in place to either cover all of the loan or some of the loan. And they'll get a loan verification certificate. That's the reason why I continue to tell you guys, stop arguing about the contract. To hell with the contract. You want the accounting records, because the accounting records is what actually shows what you actually borrowed and where every dollar went to. And it'll give you a breakdown if you had insurance premiums that was paid. This is the same reason, again, that Sally Mae, Navient, Nelnet, this is the reason why the federal government had gotten rid of them, because they was keeping the insurance premiums and not paying the insurance premiums, right? And so they was not even updating people's loans and taking the money, paying people's loans and stuff. This is one of the reasons a lot of people end up in default, because they may have been paying portions of the loan, but those portions of the loan, that money was never transferred by these here lenders, okay? So that's something that I definitely want you all to be aware of. Now, the next lender, again, I would tell you to check out. And again, these are high debt to income ratio type of lenders that you should be looking at. And this is Achieve. Achieve, again, 620 credit score. Interest rate starts at 8.9. 70% debt to income ratio. The credit file has to be at least 3 years old. And again, it's one of those lenders, they will do a soft pull, but your credit file has to be at least 3 years old. So going back to this 3 years old, aging the credit file, okay, is very important. So with these type of lenders, if you have authorized users, that's a way for you to age your credit file. Okay, it's certain authorized users you would need. So if you need authorized user, or you're trying to understand which is the best authorized user, you can type authorized user below, and I'll send you over a link to schedule a one-on-one consultation for it. Plus, we offer authorized users. Now, here's another way: adding rental payments. Adding rental payments like Rent Reporter or something like that. They will backdate your rent and say it's as the opening date. So you may have been paying rent for 4 or 5 years. They will backdate your credit file when the account originally opened. Okay, so it may have been open since 2022, right? And then they report up to the current past 2 years. So again, aging the credit file is something that's very important. Another place that's My Score IQ, okay? I'll put a link below for that. If you add utility payments onto the credit file, they can backdate your credit file with the utility payments to aid your credit file as well. I hope this video is being helpful and informative. Leave a comment, share the video if you like it. Now, here's another one that you all need to take a look at. Like I said, with Upstart, they're like iffy. All right, they're very finicky. Granted, they go from 1,000 up to 50,000, and again, they do a DTI of 75%, but you have to have a file of at least 2 years or older. And they're very conservative, but that's the reason I stated earlier that in terms of the income, it really does matter in terms of the amount of income you put on the application. Okay, so also the amount of accounts that are open, and how many inquiries. If you had with Upstart, if you had at least 6 inquiries within the past 6 months, they will not approve you. So they're like one of those more finicky type of lenders. All right. Now you have Zippy. Now with Zippy loans, unfortunately, they only go up to 15,000. However, the minimum credit score is a 580 credit score, and the DTI can be 70%. All right. Their interest rate starts at 12%. So just breaking down, like with some of the lenders, you want to try to look for lenders that work with you that has a high debt to income ratio with a low interest rate. All right. And that actually offers a soft pull, because again, some of us may have multiple inquiries and stuff. So you're trying to look for lenders that are inquiry sensitive in terms of helping you qualify. All right. So I hope this video helps you. If you have any questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.